And with this level being exposed, all that we know that we should do is, as traders, nothing is confirmed here. So what we need to do is we need to wait for the drop back onto this area. And at this area, it will create bullish scenarios. So this right here, that is a false breakout, because when price broke out here, this zone offered price very, very solid support, right? And then it broke in. But if this was a real breakout back into the zone, then price would have continued down, but it went back up. So that makes this a false breakout. So guys, whenever price moves into a zone, right, and it moves back out, it doesn't drop further or it doesn't rise further, then that is a false breakout. So on Mpo's note, Mpo said sometimes when the market is at the most bottom, then a double bottom is one of the bullish signals that we would see in the market. Now, I don't have much experience with a double bottom, but um, what to me, what jumps out at me is normally head and shoulders. But I'm just gonna continue talking on double bottom because I have in my trading career, I'm going for my third year now. But in my career, I've traded about three, four, five times the double bottom. For me, I always stick to confirmation. If I don't get confirmation, I don't want to be in that trade. Um, so on the note of double bottom, here's one, and then if I have to look a little bit further, here's another one.
Yeah. Oh, I can't come now.
So once price broke, I will always do what I would always do after price broke is I would do something like this. I would do something like this, showing you guys that price needs to fall, price needs to retest this area, and then it needs to reject it to go back up. But it's not as simple as these arrows make it out to be. It's really not as simple, guys. So for me, what I normally look at when it comes to clues is one of like I just said, one of the stuff that jumps out at me rather, is a head and shoulders. And as you can see, right over here, we've got the inverse head and shoulders. We've got the shoulder over there. We've got the head over here. And we've got another shoulder. So one thing that I want you guys to note is that when we have one shoulder and we have a dip, the moment price comes back up from this dip, it's necessary for us to prepare for the other shoulder, because when the shoulder happens, we don't want to be surprised by it. We want to be there for it. So that is me preparing for this shoulder right here. You guys understand that part?
Yep.
Yes.
100%. So in this, as price is coming down to retest for the right shoulder, as a trader, what I must do now, because I have already got this breakout is already telling me that price, because when you look at it this way, price came down vigorously and then it just flattened. This flat tells me that price will not move below this area. This was the first low after this that was created, and price just stayed above it. So, yes, so after this breakout, for me, when I get to these scenarios and I see that my right shoulder is forming, what I'm gonna do is, and you guys will see now, if you like Mr. Chowdhury, if you have a job, or Mr. Henny, if your work is really time consuming and you can't be, or you're not in time for the 4 hour confirmations, guys, there's literally nothing wrong with taking confirmations on a daily chart. In fact, taking a confirmation on a daily chart is way stronger than any, or let me rather say, the higher the time frame the confirmation happens on, the stronger the signal. So on that note, with me drawing my trend line, I'm following price down so that when it breaks out, I get it at its lowest point. So it will give me the best price possible. I got my break, I got my confirmation. So now it's time for me to buy. So now I want you guys just to uh, 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 um, just to see that this. Just look at this quickly. Market price is over here now. On this position, gold garnered 31,251 pips. That is so insane. But what I'd like for you guys to also see and understand is that after this breakout, we nearly waited a month to get that move that fed us that 31,000 pips. Do you guys understand that part? That is where the patience part comes in. If you're not going to wait for the best probable setups, you are just going to get trash, as I've been getting trash recently with GBP USD, which was actually just, it turns out that it's a stop loss hunt. And for you guys that's new in the game, it's not that it's a stop loss hunt per se, and it's the brokers. It's just that you'd find hedge funds with billions of dollars that pushes price in that direction, because that is where you'd find a pool. I'll call it that is where you find a pool of stop losses of retail traders. So that is why you will find after confirmation sometimes that price is hectically moving against us first before it goes our way. But then there's times that price just immediately jumps straight off the bat and it continues running. So after we got confirmation, what's important to note is the procedure behind setting um, setting our take profit and our stop loss. So our stop loss, when it comes to buys, our stop loss is always going to be below our support. Now, when it comes to head and shoulders, I normally do not put my stop loss below here. I put it below the head, because sometimes price will come and it will pierce far enough to reach your stop loss, and then it moves up. And if you look at it nicely, this level, which the shoulders of the inverse head and shoulders is resting on, this is a multiple tested level, meaning this is a very strong level and price can be drawn to it very easily. So we've had 1, 2, 3 um, touches, 4 touches on it before it broke and it gave us this moves. So stop loss, I'm not going to put it on the head. What I'm going to do is I'm going to add a little bit more pips, right? So that will be my stop loss. In every single buy situation, my stop loss will always be below my support. And I understand that, like with GBP USD, I think the loss there is over 2,000 pips. So with that, I understand that sometimes it's quite far, but um, as I always say, whenever I send a signal, whenever I send a setup, do not take my word as is. Try and cross reference. If you're new, I understand you're just gonna run on what I am sending in the group. But as time goes on, please double check what I'm giving you. When it's weekend and you have time, do not sit in front of the laptop and Netflix all day. Back test, see where you can perfect this for yourself. Because honestly, guys, if you look at the past weeks, or if you look at my trading patterns in general, I will analyze about 20 markets and then I'll just trade 5 of them. Now, if you're gonna wait on me, you are just gonna get the 5 that I am trading, because honestly, guys, I do not send signals or trades that I am not gonna take. So whenever you see me sending a signal with a buy or a sell and stop loss and take profit parameter, best believe I'm in those trades. There's no way that I am gonna send trades that I'm not in, because number one, lying takes effort. I have to remember what I lied about, and number two, if I'm not in the trade, how am I gonna follow it? You know, I'm gonna forget about it. So I only send signals of trades that I am going in, and if I am not, or if I have not sent a signal for a specific trade or something like that, also realize that um, it might be that I'm just not interested in that trade, or I've read something, but just because I'm not going for it doesn't mean you should not. Do you guys understand that? Because the thing is, I'm giving you guys like my whole playbook. It's open. I want you guys to succeed. So whenever you need help, or whenever you want to double check a position and stuff, I'm not saying I'm the god of trading, but what I am saying though is I have a little bit of, or let me rather say, I have enough experience to be able to let you know if you're doing the right thing or if you're doing the wrong thing. So take profit.
Uh,
We're gonna
if I
use.
if I if I may interfere, Rydal, at the moment I think you are our god of trading.
No, man, you shouldn't see it like that. You should see it as what I do. I'm giving it to you guys so that you can do it better.
Eventually we'll come there. We'll come there. We're on the wax on, wax off stadium.
Yeah, no problem. No problem. You will get there. You will get there. So, on the note of take profit, right? I'm always gonna wanna look at what is happening to the left side of me. Always. And my next zone, my next multiple tested zone is this over here. And when we get a zone like this, right? And this is really important. When we get a zone like this, then the question always arises, which one do I take? How often have you found yourself doing that? When you get a multiple of highs and then you're like, which one am I going to take? So to answer that, guys, you're always going to go with the first one. The reason why you're going to go with the first one is because this is the first rejection of that area. This, if you mark this area, right, and price comes to close to it, you know that when it comes around this price area, it's going to do something. And because price is below it, it's a resistance. So we are expecting price to push it down. So I'm just gonna um, finish up on the take profit conversation here quickly. So what I normally do is I will drag it out, and price, and this is also another important thing to note. So if you go to my notes, you will see that I have noted there that whenever we are buying, price or take profit will be in front, or it will be before we get to our resistance level. You guys remember that?
Mm.
Yeah.
And this is the reason why we put our take profit before, in front of our resistance level. And the reason for that is that um, it's not a guaranteed fact that price will go till there. Yes, price went there, but it's not a guaranteed fact. Price will draw close to it, and if the momentum is sharp enough, then price will go reach that level. But the reason why we put take profit in front of our resistance is that we want price to give us the maximum amount of money before it turns around. And as you can see right here, it turned around. I got a bearish head and shoulder, and then my bias changed for a while. So this is the reason why we have take profit um, in front of the resistance levels and in front of the support as well when we are doing a sell. So um, we have this new high now, obviously, and head and shoulders, as you guys can see here. But what is important to note is that this trade, if you guys haven't been following that much, then it's clear to the eye that this trade has been creating higher highs and higher lows. And for me, it's only when price gets back to this area and below that I would say price is going to go back to its former trend, meaning it's going to go back to the downtrend where the dollar was in charge of price. But at the moment, gold is the dominating one here. So I'm just going to fast forward it a bit to current price, to where we are right now. So if I look at it like this, right, then it looks to me, because I can't see anything, and this is too little information for me to go on, right? And it seems that price might be dropping from here. So what I normally do is I get a zoom, and I would check if in this area where price is now, if there was levels. Sometimes I'd go to the weekly as well. The weekly is also a really nice chart to predict really long term movements on.
Filters out the noise.
Oh, 100%, 100%. The larger time frames filters out the noise, as Reimer said there. So um, that was Reimer that said that, right?
Yeah.
Yes.
Okay. So when price made this, this was the area to watch. And I'm just gonna give you guys a quick lesson on why I draw two lines instead of one. So support and resistance, right? Support and resistance will never ever just be one line. It will always be a zone. So if you have just the one line, you will fall to moves like this that will break your one line, and it will have a confirmation close. And trust me, I've fallen for that so many times. So many times I've fallen for that trap. So just bear in mind that price is when it comes to support and resistance, a zone or a band is much more indicative than just one line. So if I have to look at this band that this low created, so wait, I actually got the wrong point here. Seeing that now.
Yeah.
Hey, yeah, that's the correct point. So on the note of me using my tool as well and how I get to that. So